Hey traders, Mark here. Today is Tuesday, March 20th. I didn't get a video put out last week. Frankly, I've just been dealing with some code issues that I haven't been able to resolve, and so been a little bit frustrated from that standpoint. So I spent most of my evenings trying to work through code problems and still did not get it resolved. So just last night I was working with my programmer and figured out what the issue is, and it turns out it's actually a bug that's inside of NinjaTrader 8, which explains why the code is actually working on my programmer's machine, but it's not working on my machine. So I'm working with NinjaTrader to get that resolved. Until then, I don't really have a whole lot to show you as far as the software is concerned, but I can walk through some forex stuff, and then I can walk through last week on the day trading. So Thinkorswim last week actually had its first losing week of the year, and it was a tough one. So I'm going to walk through forex first, and I want to show you guys a few things here. So I'm starting to get a decent amount of trades here on forex, enough to where I can start playing with the numbers in the spreadsheet to see what kind of difference it might make in my trading. And with that said, I want to talk about really kind of how I arrived at these multiples in the beginning, because as you know, on day trading I actually go for a much higher risk reward. But when it came to the forex, when I first started logging trades, if I used a 1 ATR multiple for my stop, it was just too tight. Well, guess what? Now as the trading has evolved, that's changed. So let me show you what happens if I change this to a risking 1 and keep the profit target the same. So here's what you want to pay attention to, guys. You can look at the win percentage. You can look at the return on investment here. So let's change this to a 1. And look what happens. Win percentage drops by almost 10%. Actually, it drops by more than 10%, but it drops by 10 percentage points. And my profit nearly doubles. So now, if we want, now from here, what I like to do is I want to start analyzing each individual trade. And what I've noticed is, if you're trading into any kind of an important level, and that level gets hit and is rejected prior to your trade entry, those trades typically don't work out. So if we remove any trade that's trading into a daily level, you can see the difference on trade type 1, right? So we started with 3,400 and a profit factor of 1.87. So we add $800 to the profit on trade type 1. Now let's look at trade type 2. Trade type 2 actually goes down. So the importance of this is each trade type is going to have its own unique filter. So now let's take a look at the hourly. If we have an hourly rejection, well, it makes a huge difference on trade type 2, and it actually drops trade type 1. So let's add back in the daily. And now let's get rid of hourly to look at the trade type 2. And look at the difference that made, right? So it increased it by $1,200. So that's a big difference. So these right here are very important, and I want to continue paying attention to them. Let's see if weekly does anything. So weekly actually looks like, does it help both of them? No, it just helps trade type 2. So anyway, as I get more and more data in here, then we can start digging into the different trade types and see why those might have an impact. Okay, now let's take a look at the trade log for day trading. Okay, so Ninja Trader's actually been doing very well. So here's Ninja Trader over the past 4 weeks and a couple days. You can see last week was actually its best week so far. Then if we look over here at Thinkorswim, last week got smoked. So what does this tell me? Well, this is really important to know. Okay? So any strategy that can make this kind of a return in a week can also see that, right? Now I'm risking about 1.5% of the account per trade. So seeing this personally, what I would do is I would reduce my risk to 1% of the account per trade. And I'd have to do the math to see what impact that would have. But it would bring this down to something that's much more manageable. And I can play with that math at another time. But anyway, I just, me personally, I would want to reduce my risk per trade, because the reason I want to do that is because I see the potential here to make massive profits. But anytime you have that potential, you have this potential too. And so you have to look at both sides. You cannot only look at the profit side. Okay, what else? That's it for now, guys. I am hoping by the end of this week, hoping to at least be able to show you guys what I've been working on, because it's actually really cool. And I think you guys will really like what I'm putting together here. So sit tight, and I'll be back with you guys later this week.